TJ, Heather, thank you so much for joining us here and having this conversation. Let's jump right into this. The AI revolution is driving the sector to a fundamentally different phase of growth with pretty major implications on valuation. I want to talk a little bit about some of those changes that's happening in the data center environment, specifically how the role of the tenant, the operator, and the power provider is changing. TJ, what's your perspective on that?
There's definitely been a material change from the data center owner, operator, developer perspective, which has, certainly impacted how tenants think about this as well. Historically, the data center developers were kind of passive utility customers. They'd find a site, they would secure the site, and then get their zoning approvals and go to the power company and say, hey, I need X amount of power. And the power company would say, no problem. Today, there's power shortages. And today you need to be an active partner with the power company where you're securing your power typically before you secure the site. The power is almost more important than the location today. And that's really what's driving the growth across the industry because the tenant sizes are increasing so dramatically where the power is the fundamental kind of gating issue to what they can deliver from a AI perspective.
Heather, what's your take?
I mean, TJ and I have had this conversation. It is super interesting. I mean, think about it. Power companies know they have the power, so to speak, now. So they're able to demand more with their expectations, like have that minimum amount of power paid for, regardless of how much is used. The tenant has to be super strong, credit worthy, all those things. So not that, TJ probably agreed with this, not that was not the case before for the strong tenant credit worthiness and things like that. But now, I mean, it's so expensive. There's so much demand for it that I think those types of issues are even highlighted more now. And I'm sure with some of the other questions, we'll dig a little bit deeper into that.
Yeah, so it sounds like a fundamental shift a bit with power becoming a major driver for some of these deals getting done. I imagine there's a lot of implications when it comes to valuation of data centers. Heather, what are some of the changes and maybe the challenges that you and the team are seeing in terms of valuing these assets?
Well, I mean, there's so many things constantly changing, but obviously power being the center, you have to have these PPAs, these power agreements in place. To TJ's point, you're not, especially if there's debt involved, there's no way that you're going to get anywhere with the development if you don't have that power in place. However, there's still delays that as an appraiser, you're taking into account. How long is it going to take before I'm seeing any return on this investment? There's a huge capital expenditure requirement at the beginning. And it takes a while. And so really understanding what that looks like at a specific property in a particular region. Also, you've got other elements, right? You've got equipment backlogs. You have, whether the transmission is going to be set up for what you require and what's going on with the grid. And that'll kind of fold into other things. Like if these major users, these major data center users are like, well, we can't wait 3 years or whatever, then they're jumping into this, like, what can we do to enhance, get us to the finish line faster? And that's when it comes into all these kind of supplemental power sources.
TJ, what are you seeing when it comes to the valuation of these data centers?
Well, I think first you go back to the land, and powered land is worth a significant multiple over unpowered land or hopefully future powered land, because that is certainly the long pole in the tent. That's going to take the longest amount of time. And so if you have that power, it's worth a significant amount of money because essentially all you need to do now is build the building, which is still takes time and there are supply chain issues. I'd say on the valuation of actual stabilized data center buildings, I think there's a pretty wide difference in opinion on where these things should be valued. And there should be different cap rates applied depending on, is it single tenant? Is it multi-tenant? Is it investment grade tenant? Where's the location and what's the kind of that second use perspective? If it's in a established network node for one of the hyperscalers, the second use perspective is or the second use case is really good. If it's in a more emerging area and it's AI training location, I think there's probably fewer buyers for that. And so the cap rate should reflect that on exit. Then there's the whole sense of where market rates have just exploded. And so where's the existing in-place rent versus where market is today? And how long is it going to take to actually be able to mark that lease to market? So all of these things kind of factor into valuation. So there's no kind of one size fits all.
Yeah. We're seeing that right now, looking at, I'd say I looked at 10 or 12 data center appraisals in the last 2 weeks. And it's that kind of mark to market question, right? Of like, all right, well, this is when they signed it even a year to 18 months ago versus what the rent is now, and figuring out, well, what to tweak and when. To TJ's point, it's funny because for like the last while, you'd hear, okay, 7% discount rate is like what you're hearing for stabilized data centers. But now you're seeing that bifurcation of location and that secondary. I thought that was one of the most interesting pieces of TJ and my discussions. Was I was looking at how these areas are saturated, like Northern Virginia, but there's this whole established network there, and also all the users, the backup users. And so there's so much that goes into it. But I think that's a really interesting point to think, because everyone's like, what happens in 10 years? What happens in 15 years when if that initial tenant rolls off, versus like going to where cheap power is. There's just so many elements that are determining, what it's worth and to whom, and all the fun that we have to deal with every day.
Well, complex for sure, right? It sounds like you're dealing both from a valuation perspective with classic real estate fundamentals, right? Those classic real estate questions, but also a broader demand question in the marketplace as AI and a lot of the tech infrastructure is changing at a rapid rate where every 6 months it feels fundamentally different. I want to talk a little bit about kind of the gap of life cycle, right? You both had brought this up in kind of first use, second use. What's driving the gap right now between kind of the life cycle of the data center building itself and then all the underlying power and cooling infrastructure? As you all look at this, what do you think investors need to know? Heather, let's start with you.
Yeah, I mean, I think one of the really unique ways to look at this situation is, you think of the sticks and bricks, the actual building. And I've seen older data centers that struggled because, what are you going to do with this older building if you can't have interchangeable parts? So one of the interesting things these days is having that kind of adaptability where you're taking modular pieces, where you're bringing in, say a building 25, 30 years useful life, and you've got constantly changing technology. Well, can we have pieces of like the power and the equipment that can be taken out when it needs upgraded or when it needs to be replaced, so that the structure doesn't become obsolete as fast? So I think there's a lot of those different efforts going on to kind of even out some of that timing differential. And also, and TJ can probably speak to this, leases are getting longer to kind of match up with the power commitment. So I think we're seeing more of that, especially with hyperscalers. But yeah, I'd love to hear what TJ thinks about like some of his co-location facilities, and if he's feeling out that same kind of momentum.
Yeah, I think what's fundamentally important are ceiling heights and floor load capacities, because what's changing from a technology perspective most are the servers. And, that's a tenant expense. That's not a landlord expense. So that's one thing I think some people don't necessarily realize. I mean, I think most investors do, but, some that are just trying to get up to speed in the industry think the landlord is taking a lot of, technological obsolescence risk, and they're really not, because that is really a tenant expense. And the refresh cycle of those servers is much shorter than obviously generators and heavy air conditioning and battery backups that the landlord's responsible for in a turnkey data center development. But early on, when I started working in this industry, the president of a data center company that we have an investment in, said to me, ceiling heights and floor load capacity. If you have the right combination there, you can accommodate changes in server technology. So these new, NVIDIA server racks could weigh up to 6,000 pounds. So if you don't have the floor loads to support those, you're probably going to be left behind. And then you need really tall ceiling heights to, evacuate the heat that these servers are generating. And so those are really kind of fundamental things. You do need to provide liquid cooling, though, to support those latest and greatest servers. It's very difficult to do that in a facility that has kind of evaporative cooling that doesn't have a closed loop system. If you have a closed loop HVAC system, you can tap into that to provide that liquid cooling. So some of the legacy buildings that have kind of evaporative cooling may not be able to do that, but there are new technologies that are constantly being created. There's like a sidecar that you can actually use in that facility next to it that's basically providing liquid cooling in a kind of a bespoke way to that server. You're not going to do AI training at a gigawatt type of level with that type of technology, but certainly a lot of tenants today are running hybrid. So they're using some liquid cooled and some traditional air cooled servers for whatever workloads they're running.
What's fascinating to me is just in hearing both of you respond to this is the fact that you're not only having to serve the role of a valuation expert, a real estate expert, but also a technology server expert and structural engineer all at the same time here. It's pretty wild to hear all the factors that do go into the valuation of these spaces. You both mentioned NVIDIA at some point, right? And they're at the forefront of kind of these AI conversations. I think what we're seeing now and the mass market is understanding is just the amount of power that AI is requiring. I think it's up to 10 times the power of standard servers. You pair that with the fact that there's a lot of old power grids that are functioning way past their intended lifespan. TJ, let's start with you on this one. What are some of the key trends that you're watching here with that balance of AI demand on power and then some of the older infrastructure?
Well, I think some of the largest kind of AI training data center, developments that you've heard about, a lot of those are using just behind the meter power. So they're doing, net gen gas on site to power that facility, not connected to the grid necessarily. Some may have some connection, but primarily they are doing self-generation. And so it's not tapping into, call it that aging grid. The US actually has a fair amount of generation. Its transmission have been some of the bigger issues. Is how do you one, upgrade the transmission you have today because you need to upgrade it, but also how do you get it to these new locations and kind of emerging data center locations? And it's expensive and it's time consuming. There's property owners and easements that have to take place in order to get it from point A to from the generation point to the actual location that needs it. And so that's where many of these delays are. Historically, a lot of the largest utility companies have added new capacity, but they've taken off capacity, which has been mostly coal-fired, and they've replaced it with solar and wind and natural gas. And so you haven't seen huge increases in power, but the fuel supply of that power has gotten greener. I think what's happening today is the shedding of the coal and some of these other fossil fuels are going to take longer to disappear because there's so much power demand in the market.
Absolutely. Heather, what are you watching in this space right now?
Yeah, I mean, I think that the whole behind the meter power sourcing is super interesting. And when you really dig into it and you find out how much money and how much space you need for like solar and wind, for example, it would take a lot to I don't have the exact numbers, but you start to get realistic about so natural gas is definitely the most utilized backup or standalone for instead of relying on the grid. But also nuclear is becoming a big thing. It's super clean, but it's also very expensive. So, I mean, I grew up near 3 Mile Island in Pennsylvania. Well, not that close to it, but you hear that whole, I was like, wait, a reactor's being reused I'm so confused, but it wasn't the one that melted down. It was the other one. But yeah, there's just this constant innovation to figure out how the power is going to be sourced. The other thing that I wanted to mention was that, and TJ and I talked about this, some of the hydropower, we were talking about the different costs and how if you're located in our example, we were talking about the West Coast. And if you're located in, say, Santa Clara, the Valley, versus on the Columbia River, where some of these, tech companies have been situated for many years, and the cost differential could be what we said, TJ, $1 million per megawatt. So thinking about that too is it's the power availability and then the cost of the power and what kind of renewable energy sources are helpful with that. So it's like all these different pieces working together.
Well, it's interesting, right? You mentioned kind of growing up by close to proximity of nuclear reactors, and I think there's oftentimes these pushbacks from communities, right, that are kind of resist some of this power source coming in, or even the data center build out as more and more folks are becoming just aware of these as like mainstream headlines. TJ, I'm curious from your perspective of some of the strategies and some of the innovations that you're starting to see in terms of companies meeting these escalating power demands while at the same time kind of balancing the community aspect of it.
Look, I think we all need to be stewards, good stewards to the community, and embrace the community and educate them early on, because there is certainly a lot of resistance today. I think a lot of it is unfounded. I think if you look at markets that really don't have a lot of data centers in them today, their actual utility rates are growing faster than locations with data centers, which have a heavy presence of data centers. And also, the building designs today with these closed loop air conditioning systems are actually really efficient from a water perspective and use very little water. But there's a lot of negative press saying that that data centers are resource hogs and they're driving up the cost of homeowners' utility cost and of using water. And the reality is that's not the case. But to be successful with the community, you just need to advocate and be open and honest with them, and also provide training programs. Work with the local community college and high school and explain what you're doing. And look, the jobs within data centers, one, there are a lot more jobs than most people tend to think. And two, they're very well paying. And so they're really supportive of the community. And many of these locations were probably initially conceived as industrial locations. And, if you're, like in the Midwest with an industrial location, or really anywhere with industrial, the number of truck trips to and from on a daily basis is really not great for the community, versus a data center that's sitting there generating a lot of tax revenue. We have a facility in Austin, Texas, and I think our first building there on that campus uses the equivalent of water as 15 homes, but we generate the equivalent of in real estate taxes of 600 homes.
Wow.
So, it's really not using a lot of resources, but it's providing a tremendous tax base for the community, which lowers the tax burden on the residents and helps them, upgrade their schools and provide really essential services. So it's a lot of it's education.
Yeah.
It seems like an interesting partnership opportunity then between local government, the providers and the builders of the data centers, and then the communities themselves to drive education. Heather, what are you seeing, in the space?
It's starting to shift. And I think it's all about education, like high paying electrician jobs and specialized electrician jobs, and providing that information. And it's been like this in real estate for as long as 25 years I've been in real estate. Is there's always a perception you have to fight. And you fight that with education and working with people and listening and things like that. So it's really back to basics, right? It's like they care about jobs, they care about noise, they want to know that they're going to that their costs of electricity aren't going to go up. So it's really kind of common sense type of things. But yeah, I think a couple of the other things I hear about it are like, as far as like strategies, interconnection reform, like streamlining permitting in some of these areas that, development is supported. So, again, there's always importance of involvement of community, government, and private sector together.
It makes total sense. Yeah, get back involved. Create more of that grassroots effort to get to deliver value, or at least educate around the value of what it's doing. So I've been blown away by this conversation from a perspective of how many things go into the valuation of these data centers, and how to even think about these as a strategic part of a real estate portfolio. As we wrap this conversation down, I'm curious, right? Bottom line, how is the valuation equation shifting for these data centers? Heather, let's start with you, and then TJ will give you the last word on this.
So I think seeing what happens with power, seeing what happens with the success of behind the meter sources, what are the possibilities for smaller users, not just the hyperscalers, starting to differentiate the capital markets treatment of the different facilities based on their financial strength, based on all of these factors that we talked about that impact the longer term success, measure risk, things like that. So it's really, it's so much different than other pieces of real estate, but in some ways it's similar.
TJ, what's your take? Bottom line.
Yeah. So look, I think like all other real estate property types, it's a supply demand. What are the fundamentals? And right now, power is the scarce input. And so scarcity drives value. And so that value is being manifested in both new development where you have power, and it is really driving value of existing in place data centers as well, because they're up and operating with power. And when you get space back, it leases immediately in the world we're in today. So those are really driving the industry. And because of the power constraints throughout the country, I don't see an oversupply issue on certainly not on the near term horizon, especially when you marry that with tenant demand and the tenant sizes are increasing dramatically just across all types, whether it's hyperscale, enterprise, co-location. Everyone wants more and they want longer duration leases. From a fundamentals perspective, it's pretty strong.
Pretty strong.
I like it. Well, this has been a strong conversation. It's been an enlightening one, and shall I say, a powerful one at the same time. TJ, Heather, appreciate you both taking the time to do this. We'll have to do it again soon. Thank you.
Absolutely.
Thank you.